Well, here we are again, another podcast, Prop Strategies podcast. Chris Johnson with me. Chris, good afternoon.
Hey, Tom. Happy opening day to you.
Hey, happy opening day. Happy Easter weekend coming up. We got a long weekend ahead of us. Markets are closed. So this is one of those. I kind of sometimes I like the weekends because it just gives me an extra day to detox from all the news. From everything going on in the markets. We got a lot to talk about today in this shortened week. I want to talk about news. I want to talk about Musk, again, yapping on Twitter. And, Musk, it's funny. Most people read the news, and Musk makes the news a lot of times, too. So we'll talk about that. I want to go back to the vaccine for a little bit. We've got technicals that are going on too, some new breakouts for the stock market itself. We've hit some new, I don't want to say historic, but really hit some new thresholds that have never been hit before. Yep. We're now in April, and here's April Fools. So there's a lot going on, but no fooling the stock market as well. We'll talk about that, and then. We'll end the podcast looking at a couple of stocks on the radar as we head into the month of April. So news, what's the biggest thing that appeals to you this week? What was the breakout news that you can think of that happened for the week that, really kind of made you look twice, move the markets?
Well, I mean, breakout in terms of moving the markets, you got to talk about the infrastructure bill announcement on Wednesday in Pittsburgh. Much awaited. Everybody's wondering what it was going to be in that. And now we're starting to get a view of what's in it. Whether or not companies are going to fight the corporate tax increase from 21 to 28% is right now what's going on in terms of, they say nobody likes to see how the sausage is made, Tom. I think we're going to see how the sausage is made because you've got such a divide right now in Congress. We're going to have the butcher shop is going to have a glass window on it right now. And so it's going to be an interesting couple of months, but I think that's got to be the number one thing that was most anticipated. And, a lot of materials companies ran up to that announcement. The buy the rumor held true in steel, concrete companies, and they're selling the news a little bit today.
Yep. And the thing I'm thinking about is that there was so much that was said in Pittsburgh. I cannot see them being able to wrap all of that into one bill. This is going to be piecemealed out. Some's going to pass. Some's not going to pass. The Republicans can't just kill everything because they'll kill any chances they have come 2022. But I think that, you could go both ways. Let's say that everything passes, which I don't think is going to happen. But let's say everything does pass. That would spur, an economic boom. But at the same time, inflation's going to definitely come front run, and Fed's going to have to raise rates. Recession comes, then Fed has to lower rates. So, right. All of that could be, instead of what we think might end up actually being the roaring 20s, as some of the economists out there say, is that, this bull market could prolong in the 20s if it's done correctly. But if everything gets pushed ahead too soon, we could see an early recession come from, again, boom equals inflation equals higher rates equals stock market drop equals Fed trying to figure out where the magic number is. So there's a lot on this chessboard, and you got to move the pieces right.
Well, let's be honest. The Fed's magic number is as close to zero as possible still, right? Especially with us printing all this, this debt. I mean, everybody points at what happened in Europe and other countries or other areas of the world and say, well, negative rates, we can't go down there. Think about this, Tom. If you're one of these central banks and you take on a $2 trillion or $3 trillion project and you start issuing bonds, you want those rates as close to negative as possible.
Absolutely.
It's just like you and me buying a car or a house. Man, I want to get that thing. If I could get the bank to give me a minus 25 basis point mortgage on my house, I'm all over it. So
exactly.
That's
pay me. Pay me to
Yeah.
take the money. Yeah.
They need interest rates to stay lower. The bond market continues to wag the dog here, as you see the TLT, and we're getting a little bit of a shimmy, a sideways movement in the TLT. But man, that trend is negative right now. The bond market wants to make more money. The Fed doesn't want to pay it. That's where the battle's going to be over the next couple of years. And I think you're dead right on 2022. A lot of political capital being spent in the first 100 days here. Got to
Yeah.
start eyeing what's going to happen in a year and a half here, because that's historically, since World War II, the incumbent office in the White House has given up seats every midterm election. That's
Yep.
a
And
thing.
and the other big news announcement, again, it's Elon Musk. He
Yes.
continues whatever he continues to say. He's definitely pushing cryptocurrency. And the latest that came out is his attempt to continue to push Dogecoin,
Yep.
which is a coin I don't even like. I mean, I honestly I don't even know what it does. But here's a 5 cent coin that was up 20%. On April Fool's Day. I wonder if the folks going in are going to get fooled. But the bigger picture here is, you said tail wagging the dog. I'm wondering if the tail is Doji and the dog is Bitcoin and Ethereum, which have really they're creating this technical top up here just shy of 60,000, and so it wouldn't surprise me in the least if we go through the 3-day weekend and we see breakouts to new highs in Bitcoin. I don't know, Ethereum. It's going to take a little bit more to get there, but Ethereum's starting to knock on the door again too. But I mean, we've been hitting the ceiling for the last couple of days, and so we break through that ceiling, and I think we're going to easily be somewhere around the 63,000 Bitcoin very quickly. My targets longer term, not too longer term, but end of April, I think we could see the 6772 area. End of the year, it wouldn't surprise me if we continue to pump money into the economy. I think it's going to have a positive effect on alternative assets like Bitcoin. Who knows? 100,000 could be on the horizon.
Well, we've
We
said it
saw
ad
we saw
nauseum.
10 to 50 in a couple of months. We could
Yeah.
easily see 50 or 60 to 100
I
a couple of
absolutely
months too.
agree. I mean, you and I have said it ad nauseum here. Bitcoin is the hedge against the weak dollar. I mean, it's no longer gold. Gold is just, I mean, pun intended, man. They are mining, they are digging this mine lower on gold in terms of the price. GLD just can't find a bottom here. It finds little, these 1 and 2 days where it'll kind of go sideways. Today it's up for the second day in a row. But
Yeah.
man,
And that's a surprise to everybody that gold
yeah,
actually finishes out the week higher
yeah.
when we were just hitting that support level, and it stabs through support, and then the sellers come out and it turns around and does another couple of days run up. The trend still is down. I see in
Absolutely.
GLD as a
Absolutely.
trader, and I've said this before. As a trader, I don't like gold. As an investor, I still like gold. I think gold's I mean, everything goes to hell, and I see gold coming back. As that old, I gotta feel it, I gotta hold it, currency.
Right. Hey, bringing it back to Bitcoin for just a second. One more point on that. Riot blockchain after the close, well, late after the close last night, dropping earnings finally. Everybody's been waiting
Yeah,
for that number to come. They show a profit of 13 cents, I think it was, against what was expected to be a loss of 8 cents. Any thoughts? And a look at Riot blockchain as it breaks through its 20-day here today on that news.
yeah. I mean, that thing should have had more of an acceleration off
Yep.
that news than it did, and it just shows how tightly tied Riot is to Bitcoin, and not to its earnings, but to Bitcoin.
Yeah.
Because I think they could have posted a loss, and I still think they would have been slightly down, but it would not have been a run. We didn't get a big run up. We didn't get a big run down after earnings. And so it just really shows that if you want an alternative to actually going out to Coinbase or Binance or any of the other coin exchanges,
Right.
if you want something that's an alternative Bitcoin, you want to be in the Bitcoin field, Riot's the place to be.
Yep. And one more, not to keep pressing on the Bitcoin, but I have had question upon question upon question in the last week about the conversation you and I had about the Bloomberg terminal and GBTC selling at a 14% discount last week. Everybody loved that little bit of information on my live stream and my chats. You got an update for us on that? I don't have a
Well,
Bloomberg
it's no
terminal
longer at a
anymore.
14% discount. The cat's out of the bag, and we might have let that cat out because it has come back. It had that rubber banding effect.
Yep, slingshot
And
engaged.
so I can't say anything more about that. It's not an optionable trust. I mean, you can't
Right.
trade options on it. It's really it's ownership. It's like
Right.
owning Bitcoin itself. But I do love the rubber band effect, and the rubber band effect this week. So GBTC rubber band effect started last week after we started mentioning it, but this week it was really Ethereum. Ethereum was trading at a discount because you watch these two coins, and Bitcoin will run up, and Ethereum will play catch up with it. And so this week, as Bitcoin was really kind of plateauing and just hitting that resistance level, Ethereum came roaring back. For instance, Thursday, for instance,
Yeah.
Bitcoin Thursday before noon, Bitcoin up maybe 0.5%.
Hey, Tom,
Ethereum up almost 5%. So
you,
it is playing catch up as well.
you
So
see me looking around?
yeah,
So
what are
it's
you looking at?
opening day.
Birds?
It's April 1st. It's opening day.
It
I'm in
is.
my home office, right?
We got to get out of here.
Which has a sweeping view of downtown Cincinnati. Snow is falling. Just now started as we were talking.
Yeah.
Come on.
I mean, we're going to get. I was telling my wife. I said, because it's hot in Florida. It's hot. It's not hot. It's
Right.
actually nice. It's in the 80s. That's not hot in Florida. But I said, guess what's coming this weekend? Not only Easter weekend, but we're going to get a blast of cold air. It's going to be down in the 40s again. This might be the very last chance to put on something
Oh,
that
oh,
sleeves that come down to here,
you're
and be
killing
able to go
me.
out and light the fireplace,
You're,
light the fire pit,
you're
because after
killing
that
me.
it's
You're not going to
all
be
I
able
can
to
see is
see
the
it.
back of your terminal, Chris.
Yeah, you're killing me, Tom. It's snowing and you're complaining about the 40s. Cry me a river. My goodness.
Well,
All right, I'm sorry to digress. I just had to.
no, but you
This
know
is
what?
no April
Opening
Fool's
day,
joke.
yeah, opening day, and the teams move from the spring training. Down here in Florida, they move from the spring training to the real field, and that's only
Yeah.
about an hour away. Nobody's
Oh,
getting on a flight; they're just moving from one stadium to the other. And I got my I'm a man of many hats, Chris. So
ooh,
I've got my I call it my Jesse Livermore hat meets retirees in Florida on.
I like
So
that. I like that.
the old ball cap they used to wear when he worked at the bucket shots as a quotation boy.
There you go. I
Probably
like
didn't have
that.
a leather one. He probably had a cloth one, but still, this is
All
my
right.
hat of the day. So, but you brought up April, so
Yep.
let's move into April for a moment. Let's
Great.
talk about the long and then the short. The long of is that I'm a pattern trader,
Mhm.
and April has one of the best bullish patterns when you look at the entire year for the stock market. So I wanted to toss that to you, and then I'm going to go and do a little digging and confirming on this with the money calendar. But what's your news that you're hearing on April? You've got some stats on this, don't you?
So yeah, I did. I actually did a great live stream last night talking about April, the seasonality there, and we came out of, you and I talked last month about week 9 and week 10 and seasonality on the weekly basis, and it's really crappy for the market, and it played out that way. April, 79% of the time, when you look back over the last 20 years, you got 79% of the time the month closing higher. The average return's about 4% when you're the upside, 4.2% for April. It's a standout. Tom. It is the second best month of the year behind January, and November's right up there too. This is it. This is, when you talk about coming out of a little bit of a funk for the market, April is where it's at. I mean, the consistency's there in terms of the win rate and then the returns being double the at any time. It's just when you look at it from a quantitative perspective, it's what you want to see on a study that tells you this is reliable seasonality. And
Yeah.
it's broad based. This market should they say the rising tide lifts all the boats in the harbor except the ones with the holes
Hmm.
in them. You're going to see a lot of boats coming up. There's still some holes in some of these hulls right now. I think Amazon and a few other companies will get a boost, but man, this should be a rising tide, and you've got earnings season kicking off. Financials. Did you notice the financials did a little bit of a pullback here over the last couple of weeks?
That might be a great buying
I
opportunity
love
because,
it.
again, I think the pressure is going to be on companies that are going to potentially underperform if interest rates keep going up. Bank stocks should not be part of that group. Bank stocks, brokerages, insurance companies, these should all benefit from a small rise in interest
Yep.
rates. Not a huge rise, but this tick, 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 tick going up the roller coaster ride.
Right.
You look at stocks like Charles Schwab, Interactive Broker. You could even go into Aflac, and you could go into insurance companies.
Right.
Banks.
Chubb. Yeah.
J.P. Morgan, Wells Fargo. Take your pick. Look at the strength out there. Strength begets strength in the financial industry. And when you get those pullbacks, that's fantastic. We'll talk about that. Save the individuals here for the end of the program, because I want to talk
Gotcha.
about an individual that's a tech. Maybe you might have an individual that is a potentially a bank stock to add
Oh,
to the
I got to go
portfolio.
tech with you too. I got travel tech, but we'll hit that in a minute. Yeah, we'll
Cool.
definitely
Okay.
hit that in a minute.
So, you mentioned seasonality, and when I look at the money calendar, what we do with the money calendar is we basically take about 325 stocks. All right. Why 325? Because 325 represents, plus or minus, represents those stocks they have the most liquidity, they have the most volume, they have high market cap. The other thing that they have that I like as an option trader is they all trade weeklies. That means that I can move in and out of them at any time. And so when I strip those out of the 4,000 optionables, I'm dealing with the top 8%.
Hmm.
And I look at those top 8%. And what those top 8% are telling me right now is that any of them that have had patterns over the last 10 years minimum, we look at those patterns. If they're moving up 90% up or 90% down, they show up on the calendar. So what we do is we get a read of what's going up versus what's going down. So if you take a look at, say, next week, for instance, so we start off next week with the 5th. I'm looking across the board here, and I've got 91, 100. 100 means 100% of the stocks that meet the criteria going up versus down are actually going higher. And so it's all 90% or higher in the next week of April. And it's just the same thing that we go through the week of the 12th, and we go 93, 91, 95, 97. 4 of those 5 days are up. Then we go through the week of the 19th to the 23rd. Same thing. We don't really turn bearish until the 29th of April. Now, this isn't perfect. This is patterns. And patterns don't offer guarantees, but there's a pretty good chance that if I'm sleeping on the left-hand side of the bed every night for the last 10 years, that's probably where I'm going to fall asleep tonight. And so, unless I do something wrong,
Good way to put it. Yeah, you might
better
be on the
better than
couch
sleep
if you do
outside
something wrong.
with a dog. But the thing is that you look at the patterns, and the patterns tell me that what you've said. When I start looking at individual stocks, makes a lot of sense.
Yeah.
And so that's the first part of April I wanted to tell you about. Now here's another part, and we might be a little bit too late to this one, but I want to talk about market holidays. So we have roughly, I think, about 9 or 10 U.S. market holidays each year. Good Friday is a market holiday where equities are closed. Yeah, the bonds are open a lot of times for a half a day here or there, depending on the U.S. holiday. But the markets are closed, and there is some really good long-term studies out there, and I can confirm these, where if you go back X number of years, the markets tend to be bullish the day before and perhaps the 1 or 2 days after. And so I'm just going to run this as we're talking real quick, just to confirm this against the S&P 500. So if
Mhm.
I go back and I look at, and I'm just running this through Brutus, that's our brute force algorithm over here. So if I run this through Brutus and I say, all right, 10 years back, look at the S&P 500, and let's just look at, we'll go back and let's just look at the 2 days before and the 2 days after. And I'm just going to run this on S&P. I'm going to run back just 10 years, and let's just see what happens. And so it only takes me a bit of this, and now I have to select the holiday. So Good Friday is the holiday that I'm going to look at. I run this on the S&P, and lo and behold, I find that in the 2 plus 2 or 2 plus 2 minus,
Yep.
2 days before, 2 days after, we actually get something close to a 1% move. In that two, and that's going back 10 years, when the S&P 10 years ago was trading nowhere near where it is right now. You take the winners, the losers, 80% of the time in the last 10 years, we've seen the S&P and the overall markets move higher. So you got a short term happening in April, which is the 2 days before, 2 days after Good Friday, and you've got the entire month of April, which we're just getting started in, where we see those pushes, those big pushes to new highs for this year. Which brings me to our next topic, S&P 400.
Yeah, the spider shares. Yep.
Been talking about that for the last couple of weeks as we've been going up, getting close, pulling back, going up, pulling back. We get a bust through. We get a bust through on the day before Good Friday.
Right. And we're 399.28 as I'm sitting here looking at it. You know what? Psychological levels. Let's talk round numbers. The more zeros, the more it counts. Whether it was 10,000 on the Dow when we crossed that, you remember back in those days, everybody whipped out the hats, and then the market fell back down again almost immediately. Psychologically, round numbers always matter. I always tell people, Tom, that it's like, when you were a kid and you get in the car with your parents to go on that 3-day drive on vacation. And you just watch the mile markers go by, and it was kind of like, oh, I can't wait till it says 100 and then 200. Same thing with the market. We bust through 400 on the spider on the first day of April, and I think that's just going to give everybody that sigh of relief of, okay, we're putting another mile marker behind us here. We might see a little resistance, a little shimmy sideways, but it's almost like you're looking for that rest area that's 50 miles away.
Isn't it interesting that you mention all these things, and it brings me back to a time that I think has been lost and forgotten, because I put my kids in the car. They don't see they don't look out the window. They look
They're
at their
doing
phone.
this. They're doing
I
this.
mean, it's just a matter of going like this, and
Yeah.
they have no idea what state we're in. When we're driving from Florida to New York or wherever we're going, and I've just given up. I've given up on that American dream. That's gone.
You
Like,
know
oh
what?
yeah, Dad, we can virtually. If I want to go to, West Virginia, or I want to go to, up the Appalachian
Exactly.
Trail, I can just virtually go there, and Google will take me there.
I'll make you nostalgic here, Tom. Howard Johnson's on the side of the road when your dad would stop up and gas up, and you'd sit at the bar at the Howard Johnson's. And then my favorite, when we would drive, and it was my dad got his first cassette player in the car. It was 3 days as we drove from Cincinnati to Maine of Barry Manilow, Barbara Streisand, and the Captain and Tennille. Oh,
Your parents and mine must have known each other. Cincinnati's not very far from Pittsburgh,
no.
which is
Oh,
where
they
I
grew up
started
in
my life.
Pittsburgh. Yeah, they grew up in Pittsburgh. So
There
yeah.
you go. Might have been neighbors. Who knows?
Oh
Anyway,
man.
I mean, my thoughts on the S&P, and you're right. They tap that 400 and pull back, tap that 400 and pull back. I think we're going to go through it in a big way.
Yep.
And if you look at the trend, you look at the channels right now, the next stop on the S&P is 410. And 410 is an interesting number. It's a round number. It's not round like 400, but it's it's a 10. It's not anything that's fractional. And number two, it lines up with the top of a channel, of a regression channel, where we go up, regress back, go up, regress back, higher lows, higher highs. And that also is a very interesting, what we like to call Fibonacci extension period, where we extend up. And we're extending up right around that 410 area. So that's the area where I see the real resistance. I don't see the resistance here. I think this is a climb. What's going to happen is everybody's going to hear about it on the news, later tonight and later this weekend. And they're all going to be rushing to do something and buy something come Monday. And I think come Monday, we might even see, unless we get some weird news, we might even see we crush that 400 number.
Yeah, I think you're right. Weird news headline here. France kind of closing. I'm going on a tangent here out in the weeds, but France doing some lockdowns. A lot to talk about lockdowns in Europe. Last week we talked about Germany reversing course. Oil coming back down. We've been touching on oil for the last few weeks, you and I. USO on its 50-day. Thoughts?
I'm going to go with that. The bigger picture is the pattern. The bigger picture is, hey, France is closed. Okay, you know what? No no disrespect to the French. All right, we as Americans, we laugh about them most of the time anyway. With going all the way back to the war, but hey, they helped us. They helped us in our time of need. But let me tell you something. I've gone to French restaurants, and when I eat at French restaurants, I leave wanting more. Do you see the little bit of stuff they put on the plate? It's terrible. As an American, I resent that. And so when France closes, I look at the same thing. It's a small plate. The bigger
That's a
picture is the rest of the
great way to
world's
put it.
opening. And you know what? Let me tell you something else that's beefing me right now. So Pfizer
Trump's got
announced that
beef.
with young adults, we get a 100%. We get a 100% pass on the vaccine efficacy rate, 100% between young adults. You know what? I think our government screwed it up. They put the 55 and older in line first, 80 and older. They shouldn't have done that. These people don't go out anyway. Leave them in be. Let them stay home. Let them stay where they are, where they're getting care. They should have put the young people out there first. Get that 100% rate out there, and we would have already been done. This would have been over.
You know what?
That's the contrarian in me.
I have not thought about that perspective.
My wife thinks I'm crazy.
Yeah, well, no, you know what? 2 weeks ago, we saw Miami blow up with, even though it was a younger crowd, the news stories also said there were a lot of older adults that were in that crowd that were just trying to let loose as well. But I think you got something there.
You know what? I mean, think about this. This could have been, like I said, going into the holidays is when this vaccine first came out.
Right.
Inject the young people. They go home for the holidays. They're clean.
Right.
Parents are clean. Grandparents are clean. We could have eliminated this much quicker. Yeah. That's just my opinion. Looking at what we now know. Of course, we could play backseat driver all day long.
I was going to say Monday morning quarterback.
That's my beef when it comes to the way this vaccine was rolled out.
I like that little twist. You threw a little twist in there. I like that.
All right, let's talk stocks.
Yep.
Let me turn my head around.
Now he's serious.
Take the contrarian side off. Now we're gonna go. Vigilante. So think about this. Last week I talked about Microsoft. Mm-hmm. That was my pick last week. All right. I don't jump in and get ahead of people, so I didn't take that trade until middle of this week. So I feel real good about that one as a long-term play. Microsoft is advancing, and I think again, whether it gets little kickbacks and bumps in the road, that's not my problem. I'm thinking longer term. I think it's going to be a slow down tech. When I talk to the research team, they say, a lot of these things look kind of overdone. What do you think about Microsoft? I said, Microsoft looks like an alpha of the S&P 500. And I'm not looking for, a 10-year outlook on Microsoft. This is a shorter term one. And so when I look at Microsoft, I'm looking for a bump. I'm looking for a bump to new highs. So, where does Microsoft go? I mean, 245 is the resistance level right now. I think the round number is 250. So if I'm buying it, and I actually, started getting into it around the 235, below 235. If I'm going from 235 to 250, think about that. It's not much of a move in the stock market. But remember, I'm an option guy. I'm looking for, a different kind of kick, looking at a different probability, looking for a different outcome. So
I like the trade, Tom. I like Microsoft for a couple reasons. First of all, I keep talking about that straight up profits. I just wrote something, there's a big dividend forage going on. Everybody's looking for dividends right now with bonds going through. I mean, you're paying for any yield you're getting in bonds. So Microsoft, it's not huge, but it's almost a 1% dividend yield on a stock that is a growth and income. That's going to be it. Companies like Intel, Cisco, some of the oil companies, Chevron, ExxonMobil. These are going to be, I once had a client that called me, and this is the story I tell in that article, called me and said, hey, buy Frontier Communications. It's got an 18% dividend yield. Well, that's a warning sign. You're going to, you pay for that because the stock goes down. Microsoft, a stock that is going to attract that fat part of the curve, not just the traders, not just the investors, but both, because it's given off a dividend right now. I like that trade a lot. I like that trade, and I like Microsoft to take out 250 here.
Okay, so here's my trade. Here's what I'm looking at for the coming week.
Mm-hmm.
I'm a little bit behind on this one, and I still got to figure it out. But I really like Adobe. So Adobe ADBE has hit it's gone up just above 500. I think about 505 resistance. And I'm looking at my charts. It did it at the end of the year. It did it again in February. If you look at the moves where we get a month up, we get a month down. We get a month up, we get a month down. Now we're running back up again. And as I see this going up, I mean, you could effectively say the bottom was at the beginning of March. But if you really look at where that bottom formed all the way out to, I mean, almost the end of March, just last week. So if that's true, we start to get that run up and that run lasts a month, then this should take us out towards the end of April. And I think we're going to go right back up and we're going to get that 500 area. And, once, twice, take me out to the ball game.
Like it.
Opening day. And so
good opening day.
So I'm seeing that 510, 520 level for this particular stock. So ADBE, that's my pick as we move to the end of the podcast. Chris, I'm hitting you with your pick. What do you got?
You know what I got to? I'm going to give you an ETF here, which I normally don't hit too much on ETFs, but I want to give something to the long-term traders. Right now, that reopening trade's only in the third inning to keep up with the baseball analogies right now. The reopening trade in the third inning of a 9-inning game is not one of those 7th-inning doubleheaders here. Look at the AWAY shares away. That is the travel tech. Companies like Uber, Airbnb, Travelzoo, TripAdvisor, Trivago. If you're going to go someplace, you're going to get on a computer most likely. Recreational travelers are going to be out there first doing it, and we all search for deals. This is the culmination. This is like a fintech, but it's all travel companies. I love that one. And when you dig one level deeper, take a look at TripAdvisor. Ticker symbol is TRIP at 56.23 right now. Stock just almost did a touch of its 50-day moving average, breaking back up towards $60. I like this stock to go to $70 over the next probably 2 to 3 months here, Tom. Everybody, you know it, I know it. We're all going to travel, whether you're doing it in your camper and I'm doing it.
I'm planning on once we get into summer, I'm taking a trip to Oregon. Mm-hmm. And I mean, one of the things I told my wife is you were mentioning Howard Johnson's. All right, I think there's only one Howard Johnson left. And I believe it's somewhere in New York, upstate New York.
That would make sense. Probably on the thruway.
But let me tell you where we're gonna go. I mean, we're going out to Bend for. We're gonna go out there. We're gonna do a little bit of backtracking and do some excursions on the way back to the East Coast. But I said if I'm going out to Bend, I got to go see the last Blockbuster, which is still the last Blockbuster ever in the world. And they got it. And what happens is this company, it was a franchise of Blockbuster. The only one left. It's become nostalgic. It's becoming a cult. Everybody wants pictures in front of it like it's a museum. Every year they have to go back to the company and say, can we extend our lease for another year so that they can have the right to use the name? And as they do that, there's this big swell of camaraderie and support. And Dish Network, I believe, owns Blockbuster. Don't hold me to that, but a larger company owns it. And, I mean, they've wound it down. This is the only thing left. And I think they use it more as a PR piece than anything else. So, got to go out there and get pictures in front of the Blockbuster. Maybe I'll sign up for a card.
Maybe,
who knows?
You know what?
I don't think I'll be back in the Bend area anytime soon. But yeah, travel industry, I agree with you. Away has only been out for a few months. This is not something that a pattern trader like me can look at specifically on the stock. But you know what? In the little bit of time it is open, it is creating a higher low, higher high scenario. But I agree with you on Trip. If you really want to take a look at something that mimics Away, go back and look at TripAdvisor, a lot longer data, so we can go and quantify this and see, are there patterns out there besides technical patterns that make sense?
Yeah, and another point on the Away shares, as you mentioned, relatively new. And I always like to point out when we talk ETF, management fees are a little higher because it's actively managed. It's not an S&P where they just go out and buy a basket and say, okay, we need to rebalance. They are out there, putting together a portfolio here. So you're going to pay a little more. I think over the next 9 months, that's going to be worth it, though.
That is right. All right. Have yourself a good long weekend, Chris.
You too, Tom.
And folks, you all do the same. Enjoyed it. We will see you next week. All right. Take care, everyone. Happy Easter. Bye now.
Play ball.